Hey everyone, you know the US dollar? It's really looking strong right now.
Yeah.
But I'm looking at this analysis and it's from Pound Sterling Live.
Okay.
And it's got me thinking, you know, is the euro about to make a comeback? The
See?
analysis is called Tired of Buying Dollars, but Not Confident Enough to Buy Euros.
Okay.
So, we're going to break this down and we're going to see if the euro actually has a shot.
That's good.
All right. So the euro, it took a hit back in October, November.
Yeah, it did. It's been kind of stuck ever since then.
Stuck how? Sometimes I feel like these financial terms, they're just a whole other language.
Yeah.
Yeah.
No, I hear you. Think about it this way. If you were looking at a chart of the euro's value,
Yeah.
instead of seeing this steep drop, it's been trading in a narrow range. So it's almost as if it's taking a breather
Okay.
before it decides, what its next move's going to be.
Okay.
That's what we call a sideways consolidation trend.
Okay.
But the key thing here, the key thing to look out for is whether it can break above that downward trend line.
So it's almost like it's got a hurdle to jump over.
Exactly. It's eyeing that hurdle.
Yeah.
And if it can clear it,
Yeah.
we might see a real rally.
So where is this hurdle? Where are we looking? What do we need to see?
Well, the article highlights 1.0628
Yeah.
as a critical level. So if the euro closes above that number on a daily basis,
Okay.
it could be a signal that the momentum is shifting. So think of it as a green light
Got it.
for potential upward movement. But even if that happens,
Right.
it doesn't guarantee smooth sailing from there.
Okay. So it's not a guarantee, but it is something to watch.
Absolutely.
Okay. There's something else I want to talk about. The article also mentions
Yeah.
the market seems tired of buying dollars,
Mm.
but is not yet confident enough to buy euros outright.
Right. Right.
So what does that actually mean for someone like me? I'm trying to make investment decisions. What does that actually mean?
Well, it's all about psychology.
Okay.
Remember the Trump trade.
Yeah.
That optimism after the election,
Right.
the dollar was soaring.
Yep.
It's starting to fade. And the dollar's power is waning with U.S. interest rates staying low.
Okay.
But here's the catch. Investors are still pretty down on the Eurozone. So they're a little bit hesitant to fully embrace the euro, which suggests it might be undervalued.
Okay.
Seems like-
Undervalued.
Yeah.
That sounds like an opportunity.
Potentially.
But I do have one concern. The article also mentions
Yeah.
there was some political drama in France.
Yeah.
There was that no confidence vote against the government.
Mm.
Did that impact the euro?
It caused a little bit of a stir.
How so?
So France issues bonds called OATs.
Mm.
Think of them as IOUs from the French government.
Okay.
When that political uncertainty spiked, investors got a little bit nervous.
Yeah.
And they started selling those OATs, which put some pressure on the euro.
So politics and economics, they're all kind of tied together.
Very much so.
But the article did say that selling stabilized.
Yes.
So are we in the clear?
It seems like, for now, it seems like the markets are looking ahead to new elections in France in mid-2025. So the panic has subsided a bit.
That's good.
And here's something that might surprise you.
Okay.
Even with all of that drama, French bond yields are actually at their lowest point since early October.
Wow.
That's a sign of resilience that
Yeah.
we shouldn't overlook.
So even amidst the political turmoil, it sounds like there's some glimmers of hope.
There are.
What else should we be paying attention to? What are the other factors at play here?
Well, this week, everyone's going to be watching the European Central Bank,
Okay.
the ECB. They have a big meeting coming up.
Okay.
And the question is, will they cut interest rates again?
I'm already on the edge of my seat. What are the chances of that happening?
It's a big question. The general consensus right now is
Mhm.
that they'll cut rates by 0.25%.
Okay.
But some analysts are predicting a bolder move of 0.50%.
Wow.
Either way, cutting rates tends to weaken a currency.
Can you explain that?
Yeah, so think about it this way. Lower interest rates,
Okay.
they make it less attractive to hold that currency. So the demand drops and its value dips. This would likely push the euro down against the dollar, lowering the euro-USD exchange rate.
Okay. So if the ECB cuts rates, the euro could weaken.
It's a possibility.
But I remember the article mentioned some conflicting opinions.
Yes. There are some economists
Okay.
who believe that the ECB should hold off
Okay.
on cutting rates this time.
Interesting.
They argue that keeping some ammunition in reserve in case things get really bad
Yeah.
could actually strengthen the euro in the long run.
Interesting. So it's about sending a message of confidence.
Exactly.
Okay. So even the experts don't really know what's going to happen.
It's a tough call.
What about over in the U.S.? What's going on over there that could impact all of this?
Well, the U.S. has its own set of factors to consider.
Okay.
We got a decent jobs report recently,
Okay.
but all eyes are on the upcoming inflation data,
Okay.
and that could really shake things up.
Why? Why is inflation data so important?
Because this particular inflation report is the last major piece of economic data that we'll get before the Federal Reserve
Oh, Fed.
makes its interest rate decision on December 18th.
So it's a big deal.
Very big deal.
Okay. So what are the scenarios? What should we be looking for?
So if inflation comes in higher than expected,
Yeah.
it might make the Fed think twice about cutting interest rates.
Yep.
Because remember, one of their main goals is to keep inflation under control.
Right.
And if they decide to hold off on a rate cut,
Yeah.
that could actually boost the dollar.
And if the dollar gets stronger, that would probably push the euro down.
Does he seesaw?
It is a lot to keep in mind.
Yeah.
This is complicated.
It's a balancing act.
It is. But that's the nature of the global economy, I guess.
Everything is connected.
So what does this mean for someone like me?
Well,
I'm trying to make sense of the markets and
Yeah.
make good decisions.
that's where things get really interesting.
Okay.
We'll dive into that in part 2.
Okay. Sounds good.
It means you got to stay informed and recognize that things can change quickly. There are definitely some potential upsides for the euro,
Yeah.
especially if the ECB makes good decisions and if that U.S. inflation data comes in lower than expected.
Okay.
But on the flip side, things could go the other way
Okay.
and the euro could weaken further.
So no guarantees.
Right.
But sounds like there's potential.
Yes.
So we've got this wait and see situation with the euro, some hints that it might be undervalued.
Right.
We have the political drama in France. But thankfully, it sounds like that's starting to settle down.
It does. And remember that detail about French bond yields?
Yes.
Despite the political shakeup, they're actually at their lowest point since early October.
Right.
That suggests a level of resilience in the French economy.
Yeah. A lot of people might not know that.
Right.
It is fascinating how these little details can give us such valuable insights.
Absolutely.
And that's what I love about these deep dives. We're
Yeah.
not just skimming the surface.
Right.
We're really getting down into it.
Exactly.
Okay, so let's go back to that ECB meeting for a second. We've talked about them potentially cutting rates.
Yeah.
What are the arguments for and against that?
Good question. So the main argument for a rate cut is to try and stimulate economic growth.
Okay.
So when interest rates are lower, it becomes cheaper for businesses to borrow money and invest.
Okay.
And it also encourages consumers to spend more.
Okay. So it's like a little caffeine boost for the economy.
Exactly.
But wouldn't that also come with the trade-off of a weaker euro?
Well, that's the big question that the ECB is grappling with.
Yeah.
Some economists argued that a weaker euro can actually be beneficial in some situations.
How so?
Well, think about it. A weaker euro
Okay.
makes goods and services that are produced in the Eurozone cheaper
Yeah.
for buyers who are using other currencies.
Right.
This could be a major advantage for export-oriented industries.
So there are some potential upsides,
There are.
but I imagine there are some strong arguments against cutting rates as well.
Oh, absolutely. One of the biggest concerns is inflation. When a currency weakens, imported goods become more expensive.
Right.
And since the Eurozone imports a lot of goods, a weaker euro could push up inflation.
Yeah, that makes sense.
And remember, the ECB is tasked with keeping inflation in check.
Yeah. You got to walk that tightrope.
Exactly.
Okay. So what's your take? Do you think they should cut rates or hold off?
Well, I'm not in the business of making predictions,
Okay.
but I can tell you that the market is already pricing in a rate cut.
Okay.
So investors seem to believe it's a likely outcome. But, as we've discussed, there are valid arguments against it.
Right.
So the ECB could surprise us.
It's a game of chess.
It is.
It really is.
They're constantly trying to anticipate each other's next move.
Okay. Well, speaking of global factors, let's talk more about the U.S.
Okay.
We touched on that upcoming inflation data
Yeah.
and how that could impact the Fed's interest rate decision. Can you walk us through that?
Sure. So the Fed is currently in wait-and-see mode.
Okay.
They're trying to get a sense of how the U.S. economy is doing. Before they decide whether to make any big moves, they've already cut rates twice this year.
Okay.
So the question now is, do they keep cutting or do they take a pause?
And that's where the inflation report comes in.
Exactly.
Right.
If those inflation numbers come in higher than expected,
Yeah.
it could be a signal that the economy is overheating.
Okay.
That might make the Fed reluctant to cut rates further.
Okay.
But if inflation stays tame,
Yeah.
that gives them more leeway to potentially cut rates again.
So it's a bit of a nail biter.
It is.
We'll just have to wait and see what those numbers look like.
We will.
But it sounds like whatever the Fed decides, it's going to have a global impact.
Absolutely. The U.S. and the Eurozone are two of the biggest players in the global economy.
Yeah.
So their monetary policies are closely linked. If the Fed cuts rates, it could weaken the dollar,
Okay.
which could indirectly be good news for the euro.
Okay.
But if the Fed signals they're not planning to cut rates anytime soon, that could strengthen the dollar and potentially weaken the euro.
It's like they're dance partners.
It is.
They're always influencing each other's movements.
This very intricate dance.
Before we wrap up this part of the conversation, I want to explore one more angle.
Okay.
The political landscape.
Okay.
We've talked about France.
Yes.
What about the bigger picture?
Yes.
How might that impact the future of the euro?
That's a great question, and one that a lot of investors are thinking about right now.
Yeah.
Political stability, or the lack thereof,
Right.
can have a huge impact on how currencies perform.
Uncertainty makes people nervous,
It does.
and that can really shake things up.
Absolutely.
So what are some of those political factors that we should be watching?
Well, elections are always a big one.
Yeah.
For instance, Germany is scheduled to hold elections in early 2025,
Okay.
and the outcome of that election could have major implications for the entire Eurozone.
How so?
Well, different parties have different economic and fiscal policies. So we could see changes in government spending or even shifts in the Eurozone's relationship with other countries.
Okay.
Any of these could boost or erode investor confidence in the euro.
So elections can be a bit of a wild card.
They can.
What other political factors should we be watching?
Another one is the rise of populism and nationalism
Okay.
in some European countries. These movements often favor policies that can be seen as economically risky,
Yeah.
and that leads to uncertainty
Right.
and volatility in the markets.
Okay. So are there any other political wild cards that we should be aware of?
Well, Brexit is still a factor.
It always comes back.
It does, even though the UK is no longer officially part of the EU,
Right.
the ongoing negotiations
Yeah.
and the trade deal between the UK and the EU could still have ripple effects on the Eurozone,
Okay.
especially if there are disruptions to trade or financial flows.
It's a lot to keep track of.
It is.
So we've got economic uncertainty, political risks,
Mhm.
and these upcoming decisions from central banks. With all that in mind, what's your overall assessment of the euro?
Well,
Is it a good investment?
as you might expect, there's no easy answer. There are definitely scenarios where the euro could gain strength, especially if the ECB manages things well and those political risks start to diminish.
Yeah.
But there are also things that could drag it down,
Okay.
like a global economic slowdown or renewed political instability.
So it's a mixed bag.
It is.
Opportunities and risks.
Exactly.
I guess that's what makes investing so interesting.
It does. It's all about weighing the pros and cons, making smart decisions,
Right.
and hoping to come out on top in the end.
But investing is a marathon, not a sprint.
Exactly. It's important to stay focused on the long-term fundamentals and make decisions that align with your overall financial goals.
Okay. So don't get too caught up in those day-to-day fluctuations.
Exactly.
Now let's talk about the U.S. dollar.
Okay.
We discussed how sentiment might be turning away from the dollar.
Yeah.
Do you think that trend is going to continue?
That's a great question.
Or is the dollar still king?
Well, the dollar has enjoyed a long run as the world's reserve currency.
It has.
It's benefited from a number of factors: the size and strength of the U.S. economy,
Yeah.
the relative stability of the political system,
Right.
and the depth and liquidity of its financial markets.
So are there any challengers to the throne?
There have been some whispers of discontent in recent years,
Really?
especially from countries that feel like the dollar's dominance gives the U.S. an unfair advantage.
Mm-hmm.
Some have even proposed alternative reserve currencies
Wow.
or systems that would reduce reliance on the dollar.
So there's a potential power shift brewing.
It's possible.
What could drive that?
Well, one factor to consider is the rise of those emerging market economies,
Okay.
particularly China and India.
Right.
As those economies continue to grow
Yeah.
and become more integrated into the global financial system,
Yeah.
they're going to want more influence.
Right. The more economic power you have,
Yeah.
the more say you want in how things are run.
Yeah.
Okay. What else could shake things up?
Another thing to watch is the increasing adoption of cryptocurrencies
Okay.
and other digital assets. Now, while it's still early days for crypto,
Yeah.
it has the potential to disrupt traditional financial systems
Right.
and create new ways for making international payments and investments.
So crypto is kind of a wild card.
It is.
It could be huge, or it could just fizzle out.
We'll have to wait and see.
It's hard to say.
It is. The world of finance is constantly changing.
It is?
It's important to stay flexible.
Right.
But no matter what happens with crypto or the dollar's dominance, one thing remains constant.
What's that?
Diversification.
Diversification, that's the golden rule.
It is. By spreading your investments across different asset classes, currencies, geographic regions,
Right.
you can manage your risk more effectively and potentially improve your returns.
So even if the dollar loses its top spot, it's still smart to have some exposure.
Yes. But we should also be exploring other currencies and opportunities.
Right. To hedge our bets.
Exactly. We live in an increasingly interconnected world.
We do.
And having a global perspective is essential for investing.
This has been an incredibly insightful conversation.
So, Cree.
We've learned so much.
We have.
From the euro's prospects to the bigger trends shaping the global economy.
It's a lot to take in.
So what are some of the key takeaways that our listeners should remember?
Well, I think the most important takeaway is that uncertainty is the new normal.
Okay.
Things can change very quickly, so stay adaptable.
Be ready for anything.
Exactly.
Any other pearls of wisdom.
Yes. I can't emphasize enough the importance of critical thinking.
Yeah.
Don't just follow the headlines or get caught up in the herd mentality.
Right.
Do your own research. Seek out different perspectives.
Yeah.
And ultimately, make decisions that align with your financial goals.
And your own risk tolerance.
Yeah.
Critical thinking. It's the superpower we all need.
It is.
So before we wrap up, I want to thank you so much for sharing your insights with us today.
It's been my pleasure.
It's always a pleasure to have you on.
Likewise.
And thank you to all of our listeners for joining us on this journey.
Yes.
Thank you. We'll be back next week with another deep dive into the world of money markets and the forces that shape our financial futures.
Looking forward to it.
That was a lot of information.
It was. We covered a lot of ground.
We did. I feel like we traveled the world.
We kind of did.
Okay, so let's get back to that title from the article. We were talking about tired of buying dollars, but not confident enough to buy euros.
Right.
We've talked about all these different factors that are influencing these currencies. But do you think now is the time to reconsider that dollar-heavy strategy?
Well, that's the million-dollar question, isn't it?
It is.
And there's no easy answer. Unfortunately.
Okay.
It really depends on your personal circumstances, your risk tolerance,
Right.
your long-term goals, a lot of different factors.
So it's not a simple yes or no.
It's not.
What are some of the questions that someone should ask themselves when they're trying to make this decision?
I would start by encouraging everyone to take a look at their overall investment strategy.
Okay.
Does it still align with your goals?
Hmm.
Has anything changed in your life that might warrant some adjustments?
Right. It's easy to set it and forget it.
It is.
What else?
I'd also suggest taking stock of your current currency exposure.
Okay.
How much of your portfolio is actually in U.S. dollars?
Hmm.
And are you comfortable with that level of exposure?
Right. It goes back to diversification.
Exactly. Don't put all your eggs in one basket.
Even if it seems like the safest basket.
Right.
So if someone is considering diversifying into other currencies,
Yeah.
is the euro a good option?
The euro might be worth a look.
Okay.
As we've discussed, it's definitely facing some challenges.
Right.
But it also has the potential to appreciate in value,
Okay.
especially if the ECB handles things well
Right.
and some of those political risks start to fade.
So it's a bit of a calculated risk.
It is,
Yeah.
but with potential for reward.
Okay. Any final words of advice for our listeners who are trying to figure this all out?
Don't rush into any decisions.
Okay.
Take your time, do your research,
Yeah.
and don't hesitate to talk to a financial advisor
Good advice.
if you need help, making those decisions.
Right. Because sometimes that fear of missing out, FOMO,
Yes.
can really drive some bad decisions.
It can. You want to make sure that you're making choices that are right for you.
For your circumstances.
For you, exactly. And remember, the financial world, it's always changing.
It is.
So what might seem like a good idea today could be a totally different story tomorrow.
Right. So stay informed,
Yes,
stay adaptable.
absolutely.
Never stop learning.
Couldn't have said it better myself.
This has been a great conversation.
It has.
I feel like we've learned so much
Me too.
about the euro,
Yeah.
the dollar.
Yeah, the whole global economy.
It's fascinating.
It is.
So to our listeners out there, thank you so much for joining us today.
Yes. Thank you for listening.
We hope you enjoyed this deep dive. And we'll be back next week with another one.
Looking forward to it.
So until then, stay curious, stay informed, and keep on diving.